Have you ever wondered how a digital currency could redefine our concept of money? Today, we're diving into the captivating story of Bitcoin, the world's first decentralized cryptocurrency. From its mysterious origins to its most significant milestones up to the present day, let's explore how Bitcoin has evolved and why it matters. In 2008, amid a global financial crisis, a person or group using the pseudonym Satoshi Nakamoto published a white paper titled Bitcoin, a peer-to-peer electronic cash system. This groundbreaking document outlined a vision for a new kind of money, one that operates without a central authority, relying instead on blockchain technology to secure transactions and control the creation of new units. The timing was crucial. People were losing faith in traditional banking systems, and the idea of a currency that could operate outside of government control resonated with many. On January 3, 2009, the Bitcoin network came to life with the mining of the Genesis block, also known as Block 0. Embedded in this block was a message: the Times 03 Jan 2009 Chancellor on brink of second bailout for banks. This was not just a timestamp, but a commentary on the instability of traditional financial systems, a core reason for Bitcoin's creation. It was a declaration of independence from the conventional financial world, a bold statement that hinted at the potential for a new economic paradigm. In the early days, Bitcoin was mined and traded among a small community of enthusiasts and cryptographers. It was a niche interest, almost a secret society of digital currency pioneers. Then came May 22, 2010, a date now celebrated as Bitcoin Pizza Day. A programmer named Laszlo Hanyecz made history by purchasing 2 pizzas for 10,000 bitcoins, marking the first real-world transaction using Bitcoin. While at the time, that amount of Bitcoin was worth around $41, the monumental nature of the transaction was priceless. It was a tangible moment that bridged the gap between the digital and physical worlds, proving that Bitcoin could indeed be used as a medium of exchange. As Bitcoin started gaining traction, so did both opportunities and challenges. In 2011, the dark web marketplace Silk Road launched, using Bitcoin for transactions due to its pseudonymous nature. While this association with illicit activities drew regulatory attention, it also highlighted Bitcoin's potential for privacy and freedom from censorship. The duality of Bitcoin's nature became apparent. It could be a tool for liberation or a means for nefarious deeds. This complexity would continue to shape the narrative around Bitcoin, forcing society to confront the ethical implications of a decentralized currency. As Bitcoin's value increased, so did the number of exchanges, facilitating its trade. Mt. Gox, once handling over 70% of all Bitcoin transactions, became the largest exchange. However, in 2014, Mt. Gox declared bankruptcy after losing approximately 850,000 bitcoins due to hacks and alleged mismanagement. This event shook investor confidence and underscored the need for better security measures in the cryptocurrency space. It was a harsh reminder that while the technology was revolutionary, the ecosystem surrounding it was still fragile and in its infancy. Despite these setbacks, mainstream adoption grew. Companies like Microsoft, Dell, and Overstock.com began accepting Bitcoin as payment. In 2010, the launch of the Bitcoin Investment Trust allowed institutional investors to get involved, signaling increased legitimacy. The narrative was shifting. Bitcoin was no longer just a curiosity for tech enthusiasts, but was slowly being recognized by the broader financial world. Then came 2017, a pivotal year. Bitcoin's price skyrocketed from under $1,000 to nearly $20,000 by December. This surge was fueled by increased media attention, the rise of initial coin offerings, ICOs, and growing public interest. The introduction of Bitcoin futures on major exchanges like the Chicago Board Options Exchange, CBOE, further legitimized Bitcoin in the eyes of traditional investors. It was a frenzy, a gold rush of sorts, where everyone wanted a piece of the digital pie. However, what goes up often comes down. In 2018, the cryptocurrency market experienced a significant correction. Bitcoin's price plummeted and many ICOs failed, leading to increased scrutiny and calls for regulation to protect investors. The exuberance of the previous year gave way to a sobering reality, as many who had jumped into the market without understanding its complexities faced significant losses. Amidst the market's ups and downs, technological advancements continued. The implementation of the Lightning Network aimed to solve Bitcoin's scalability issues by enabling faster and cheaper transactions off-chain. This was a significant step toward making Bitcoin more practical for everyday use, addressing one of the primary criticisms that had been levied against it. From 2019 onward, institutional interest surged. Companies like MicroStrategy and Square invested hundreds of millions of dollars in Bitcoin, viewing it as a hedge against inflation. In 2020, PayPal announced support for Bitcoin, allowing its vast user base to buy, hold, and sell cryptocurrencies directly within its platform. The narrative of Bitcoin was evolving. It was no longer just a speculative asset, but was becoming a legitimate part of the financial landscape. In 2021, El Salvador made history by becoming the first country to adopt Bitcoin as legal tender. President Nayib Bukele championed the move to promote financial inclusion and reduce reliance on remittance fees. While the decision was met with both praise and criticism, it undeniably marked a significant milestone in Bitcoin's global journey. It was a bold experiment that would be watched closely by other nations, a test of whether Bitcoin could function as a national currency. As with any revolutionary technology, Bitcoin's energy consumption became a hot topic. Critics pointed out the environmental impact of Bitcoin mining, which relies on energy-intensive proof-of-work algorithms. This sparked debates and pushed the community to explore greener alternatives, such as renewable energy sources and more energy-efficient consensus mechanisms. The conversation around Bitcoin was no longer just about its financial implications, but also about its environmental footprint and sustainability. Globally, governments grappled with how to approach Bitcoin. Some countries embraced it, while others imposed strict regulations or outright bans. In the United States, regulatory bodies like the Securities and Exchange Commission, SEC, began to establish clearer guidelines, aiming to balance innovation with consumer protection. The regulatory landscape was beginning to take shape, and how governments chose to engage with Bitcoin would have lasting implications for its future. Despite challenges, Bitcoin has shown remarkable resilience. It has weathered market volatility, regulatory hurdles, and technological challenges. As of 2023, Bitcoin continues to be a focal point in discussions about the future of money, digital assets, and decentralized finance. It has evolved from a niche interest to a global phenomenon, capturing the imagination of millions. So, what is Bitcoin? It's more than just digital money. It's a transformative technology that challenges traditional financial systems and empowers individuals worldwide. Whether you're an investor, a tech enthusiast, or simply curious, Bitcoin's story is a fascinating chapter in the evolution of currency. It invites us to rethink our understanding of money, power, and the future of economic exchange.